Joining us for last hour calls. Gentlemen, good afternoon. Ashwani, your thoughts on the way the markets moved today, especially the bank Nifty, and what would be your last hour calls?
Well, first of all, it's not surprising. I told you that on a slightly medium term basis, I did not expect a breakout. This has been the fourth breakout if you start from 9,000. And the fourth breakout, with each successive breakout, the odds of the breakout sustaining keep declining. Now, today, who has sold these large banks? My sense is that the institutional selling, both from FII, DII, etc., each time the market goes up, they dump their stock. This is called distribution. Your Robin Hoods cannot compete against FIIs. So it's better that they kind of realize that at key levels, at these current levels, institutions are selling. Yes, you can do up and down for a few days, but my sense is it will be very, very difficult to get past this 10,900, 11,000 zone. I had mentioned even last week that we have certain put spreads of about 10,600 type of put, and if this goes on, this narrowing bread, this leadership getting frittered away, then chances are that the market could get into some kind of a correction. On banks, situation is more precarious. You have the bank Nifty range of 22,000 to 23,000, last week's range. We are almost on the verge of breaking last week's low. So if that starts to trend on the downside, plus Reliance is looking toppish. It has fallen, I think, $30 from the highs today. So again, at some point that will top out. So more and more stocks are moving towards the red side. Having said that, for right now, ICICI is a sell with a stop of 360, target of 345. Bajaj Finance is a sell with a stop of 3,300, target of 3,150, and Tech Mahindra is a buy with a stop of 580, target of 615.
Okay, that's interesting. So Ashwani is going after some of the financials on the sell side today. Let's bring in Mitessh as well. Good afternoon, Mitessh. So it's really a tale of two cities. I mean, between Reliance on one side and banks on the other side. What are your trades?
Yeah, good afternoon, Surabhi. Rightly put, I think, the financial or the banking sector underperformance is clearly preventing the Nifty to give a breakout. And my sense is that I think, the intraday charts of the hourly and the 2 hourly charts of the bank Nifty do suggest further corrections. So I would even look at a test of around 21,350, 400 zones. Which is where the bank Nifty had last made a swing low around the late period in June. So overall, I think the banks would prevent a breakout, and I think the sideways choppiness might continue in the overall markets. I would now look at the index possibly consolidating and trade with stock specific bias. I have two calls right now. Colgate is a buy with a stop at 1388 for targets of 1450, and DLF is a sell with a stop at 146.5 for targets of 134.
Okay, well, we have SP Tulsian of sptulsian.com joining us on the show, and I think we have Devin Choksi as well along with him. Gentlemen, good afternoon. Ms. Tulsian, I wanted your thoughts first on HDFC Bank. I know, you've been warning about some weakness in the large banks, but what do you make of this, 2.5% decline that we have seen today in HDFC Bank?
So, I'm not worried on the Bloomberg news, which we are attributing for the reason for the fall in the HDFC Bank. In fact, if you recall, on Friday, I warned on the Bank Nifty that things are seen to be in an overbought position. And what I've gathered, in fact, on the low volume, the prices were seen held up for the HDFC Bank and ICICI Bank. And even if you see today's negative contribution of Bank Nifty by about 350 points, of that 320 points are contributed by HDFC Bank and ICICI Bank, maybe 220 points and 90 points. So this is just seen to be a method, by which we are seeing the selling by the DIs and FIs, both in these two index heavyweights of Bank Nifty, that is HDFC Bank and ICICI Bank, and it seems that they are building the position in the futures, because you cannot expect the future premium to rule at maybe 70-80 points when the cash shares are seen to be so low. Because Bank Nifty was in an overbought position when we started the day. It opened with a premium of about 35-40 points. Now moved to a level of about 75-80 points. Now I don't think that any ordinary trader will have the courage to go long on the Bank Nifty unless until the institutional investors kind of people, those who have sold and are buying in the futures. So taking that as an indication or as a data point, I'm keeping that probably the bottoming out of the Bank Nifty will happen today. Tomorrow to weekly expiry, I'm expecting the positive bias. Maybe tomorrow itself we will be able to see an upside or maybe an upside of about 300 point plus on Bank Nifty, again led by the HDFC Bank. Because I don't think that these reports can really make both the stocks, in which the institutions, that is DIIs and FIIs, are seen heavily invested, can really go haywire. So yes, maybe delivery-based selling, but tactical buying or the long position seen having built by them in the futures, and that is giving this weakness in the cash, and that is deriving the low value in the Bank Nifty also. But because of the Bank Nifty premium of 60-70 points, though that is indicating that the strong hands are building up the long position.
Okay, well, that's HDFC Bank making headlines for the wrong reasons today and under pressure. We also have Devin Choksi of KR Choksi Securities joining us on the show. Devin, let me talk to you about the other end of the spectrum. I mean, this excitement around Reliance that has continued non-stop, I think, right from the March lows. The question is, now at these levels of 1900 plus, does it still give you the comfort for making any fresh purchases?
Yeah, good afternoon, Survi. Well, I think there are two aspects to it. I think on one side, we are looking at the fundamentals of the business, which is appearing pretty clear. According to me, I think most of the people in the market have factored into account the reduction into the debt position and the benefits arising out of it. That part is already factored in. Maybe the market is also factored in another aspect now, that I think whether the company would reward shareholders, given the kind of a possibility that they have on both on the business side as well as I think on the balance sheet side. So on that, I think the stock has rallied. To me, I think this particular rally is largely driven by, I think, the liquidity which is entering into the system. And liquidity would chase some of the larger counters like Reliance, where they have better amount of momentum also due to the positive news. At the same time, ability to entry and exit in quick succession. So that is where I think you are seeing this particular rally. To me, I think the major news as far as Reliance is concerned, I think the announcement of Saudi Aramco, as in when it happens, could be sounding as a major news, because I think that is the amount of money which the company is looking at as far as I think the refining business or the chemical business is concerned. I think from that point of view, if you look at it, I think maybe short corrections in the market may happen, but ultimately I think market will look forward to the positive news in the Aramco money coming into the stock.
Okay, that's on Reliance. Devin, good afternoon. Now, this week is going to be all about IT earnings, right? And today we've seen a big move in names like Tech Mahindra, HCL Tech. We've, of course, already seen TCS's commentary. What would be your top pick in the IT pack?
Good afternoon, Anuj. Well, I think that TCS's commentary has been extremely positive, according to me. I think they have basically sounded very clearly that they've seen probably the bottom in the first quarter, and I think likely to see better performance going forward. At the same time, I think more and more opportunities coming up on the digital side, more and more opportunities coming in different verticals, where they would probably, I think, go for the complete digital-based platform, and I think the automations as far as I think the customers of TCS are concerned. So certainly, I think that remains in the top league as far as I think the stock is concerned. I'm not suggesting whether I think current market price should be bought into, but the fact is that market does give correction. I think I would not think that I think more than 10% kind of a correction would probably I think demand further fall in this stock. I don't think so. Maybe I think it is around 10% kind of a correction could be I think a good entry opportunity for companies like TCS and as well as for Infosys. Tech Mahindra also I think for good reasons I think is moving up. I would rather think that I think any corrective fall in these 1, 2, 3 counters I think could be a good opportunity to buy afresh into the portfolio.
Okay. All right, gentlemen, we've just gotten started. Lots more questions coming your way. We do need to take a very quick commercial break. We'll be back in just a moment. And of course, we also get chatting with Rajiv Thakkar of PPFAS Mutual Fund today.